Hey everybody, welcome to Mortgage Today for Monday, March 4th, 2024, and oh, what a day it was. UMBS opened the day down 16 basis points. Contracts on the S&P 500, the Nasdaq 100 traded around flat, though chipmakers, which are at the forefront of the recent rally, rose in pre-market trading. Both U.S. indexes ended Friday at all-time highs, with the S&P 500 having advanced in 16 of the last 18 weeks, a run not seen since While markets have broadly pushed Fed policy easing expectations to July from the previously anticipated May, traders still expect 75 to 100 basis points worth of rate cuts this year. Some hints could come this week from Fed Chair Powell's congressional testimony, while the European Central Bank will hold a policy meeting on Thursday. A raft of economic data is also due, including U.S. monthly payroll figures on Friday. We've been looking forward to the first week of March since February 13th CPI report because it's the first time since then that we'll have top-tier economic reports capable of providing a meaningful cue for bond market momentum. If there's a one report in mind to fill that role, it's Friday's jobs report. But there will be other worthy lieutenants on each of the preceding 3 days. Monday, however, was a dud in terms of scheduled data, a placeholder day while we prepare for higher potential volatility throughout the rest of the week. Consumer sentiment fell in February according to the University of Michigan Consumer Sentiment Survey. We remain well above historic averages despite the good economic numbers. Short-term inflationary expectations ticked up from 2.9% to 3%, while long-term expectations remained at 2.9% for the third straight month. The Fed released a report on Friday flagging some of the risks for the banking sector and the overall economy. In it, they said they weren't ready to move down the Fed funds rate until they gained greater confidence that inflation is moving back down to its 2% target. Where have we heard that before? Every now and then the bond market makes a case for a 4-day work week. Today is one of those days as absolutely nothing of consequence transpired in terms of trading levels. Volume was at its lowest levels since the Monday before the last CPI report 3 weeks ago. That's a fitting milestone considering we've been waiting for this week of data ever since that CPI report. But in case that's not already clear, it's the week as a whole that matters. Today was just a placeholder ahead of the steady ramp of scheduled events culminating in Friday's jobs report. UMBS ended the day down 14 basis points at 100.47. So at 100.47, that is putting us right above that black Fibonacci line that's been one hell of a ceiling for a while. But we're still constrained underneath the 25-day moving average and the 50-day moving average. Then we got some support below it. So hopefully we can find a way to stay above that Fibonacci line.